You've been watching the stock market, haven't you? It's been a little crazy lately, especially the S&P 500.
Oh, yeah. Definitely a lot of ups and downs.
And you've sent us a ton of stuff. Articles, forecasts, even some chatter from X. It seems like everyone's got an opinion these days.
Yeah, everyone's a market expert.
Well, today we're doing a deep dive into all your sources, focusing on that big drop in the S&P 500 on March 10th. Then we'll try to figure out what might happen the rest of the month.
The rest of March should be interesting.
And trust me, some of this data is pretty surprising. To help us break it all down, we've got, well, a market expert here.
Happy to be here. Always a good time to talk markets.
So March 10th, 2025, the day the market, well, kind of took a nosedive. The S&P 500 plunged 3.6%.
Yeah, biggest single-day drop in over a year.
And the Dow and NASDAQ also took a hit.
Yeah.
A 3.6% drop, that's huge. What usually causes that kind of panic selling? Should we be worried?
Well, yeah, a drop like that is definitely noteworthy. The S&P 500, it's not just a bunch of companies, you know. It really reflects how confident investors are in the U.S. economy, American innovation. And when you see a drop that steep, well, it means people are getting nervous.
Your sources actually use some pretty strong words to describe it. Rapid sell-off, sharp pullback. And your X feed was blowing up, everyone trying to figure out if it was because of the Trump administration's tariffs.
Oh, the tariffs. Yeah, those are definitely a factor.
Yeah, but you said earlier it's usually not that simple. So what else could be going on here?
Right. So we need to look at the bigger picture. You included some really great historical data on the S&P 500 going back to 1950.
It's amazing data. I was actually kind of surprised to see that March has always been a bit of a mixed bag for the market.
A little up, blow down.
Yeah, not typically a disaster, but definitely not always smooth sailing.
Exactly. Which makes this 3.6% drop even more interesting. It's way bigger than we usually see this time of year.
So something's different this time, but what is it? That's the big question.
The million-dollar question.
Well, it's got this huge drop, and maybe the tariffs are partly to blame, but it's probably more complicated than that. So what do those web forecasts you sent say? Some of them are predicting an 8–12% decline this month.
Yeah, some are pretty bearish.
But then others are saying we could actually see a 9–10% gain for the whole year.
Some are quite bullish.
So which is it? Are we doomed, or is there hope?
Well, that's where things get even more, I guess you could say, tricky, because despite all this, earnings are still projected to grow 11% this year, so maybe things aren't as bad as they seem.
Okay, so maybe there's a silver lining.
Maybe, but the market is definitely volatile right now, so it's really hard to say for sure.
Feels like everyone's just guessing at this point.
A little bit, yeah. Trying to make sense of it all.
So what do we do?
Yeah.
Antacids or champagne?
I'd say maybe a little of both. Probably
Yeah.
a good idea to have both handy. Look, the market's a complicated thing, and right now it's sending out all sorts of mixed signals. You've got those tariffs, which are a definite negative, but then you've got those strong corporate earnings projections, which are a big positive.
It's like a tug of war, and we're stuck in the middle.
Yeah, exactly, and we're trying to figure out who's going to win.
Well, you mentioned earlier that the market often bounces back after a big drop, especially after a few good years like we've had. Does that give us any reason to be optimistic?
It definitely does. Remember, the market doesn't just go straight up all the time. It needs to take breaks, even pull back sometimes.
Like catching its breath.
Yeah, kind of. And those pullbacks can actually be healthy, you know? They prevent things from getting too overheated.
So maybe this 3.6% drop isn't the start of something terrible, but just a correction?
It could be, yeah. And if it is, then we might see things stabilize pretty soon.
Well, that's good news. But even if it is just a correction, that sell-off was pretty intense. What does that tell us about how investors are feeling right now?
I think it tells us that there's a lot of fear out there. Investors, they see those tariffs, they hear talk of a recession, and they start to get nervous.
Makes sense.
And fear, well, it can spread pretty quickly.
Like a virus.
Exactly. One person starts selling, then another, and pretty soon you've got a full-blown panic.
So how do we stop that from happening? How do we figure out what's real and what's just, panic?
That's where those corporate earnings projections come in. If companies are still making money, if they're still growing, then that's a good sign that the economy is not as bad as some people think.
So we need to focus on the good news too, not just the bad.
Exactly. It's easy to get caught up in the negative stuff, but there's always a flip side.
Okay, so what are some examples of companies that are actually doing well right now, despite all the craziness?
Well, one sector that's been pretty resilient is technology. A lot of tech companies are still reporting strong earnings, even with the tariffs and the volatility.
They're kind of like immune to it all.
Not immune, but definitely adaptable. They're finding ways to work around the challenges, whether it's by diversifying their supply chains or expanding into new markets.
So they're not just reacting, they're actually thinking ahead.
Right. They're playing the long game, and that's what you want to see in a company.
So for our listener who's been following all of this really closely, are there specific companies or sectors they should be paying attention to right now? Anything that might be a hidden gem?
Well, I can't give specific investment advice, of course.
Of course, of course.
But I will say this. Look for companies with a good track record, strong management teams, and a clear vision for the future. Those are the ones that are most likely to succeed in the long run.
So instead of trying to time the market or chase the latest hot stock, focus on the fundamentals.
Yeah, exactly. Look for quality companies that are solving real problems.
That makes a lot of sense. So we've talked about the tug of war between fear and opportunity, the possibility that this is just a correction, and the importance of focusing on companies that are actually doing well. But what about those daily projections you mentioned? What do they tell us about what might happen in the coming weeks?
Okay, yeah, let's dive into those. Remember, these are just projections, not guarantees, but they can give us an idea of what might happen.
Right, they're not crystal balls.
Exactly. So let's break March down into 3 periods based on what the data shows.
Okay, so starting with week 1, what's the outlook?
Well, we already had that big drop on the 10th, and the projections suggest that we might see some more downward pressure in the short term. Things could be a little bumpy as investors adjust to the tariffs and try to figure out what's next.
So week 1, maybe not so great. But what about mid-March? You said earlier that it historically tends to be negative. What are we seeing there?
Yeah, the projections for mid-March from about the 15th to the 20th are a little more worrisome. Historically, we've seen some bigger drops during that period.
Oh, okay. And when you combine that with the current volatility, well, there's a chance we could see things go down even further.
So buckle up. It could be a rough ride.
Yeah, could be. But then things start to look a little brighter towards the end of the month. Historically, the last week or so of March tends to be more stable, even slightly positive.
Here's a little ray of hope.
Yeah, exactly.
Right.
Investors start to think about earnings season, which is coming up in April, and they start looking for bargains. So there's a chance we could see a bit of a recovery.
Okay, so maybe a happy ending after all. But you said earlier that the volatility could mess things up. So what should our listener be watching closely over the next few weeks to get a sense of which way things are going to go?
I'd say keep an eye on those corporate earnings reports. Those will give us the best indication of how businesses are actually doing.
Right, the real data, not just the speculation.
Exactly. Are companies meeting their earnings expectations? Are they raising their guidance or lowering it? That's what we need to watch.
Cut through the noise and get to the signal. I like it.
Well, we've covered a lot of ground today, but before we wrap up part 2 of our deep dive, is there anything else our listeners should keep in mind as they navigate this market?
I think the most important thing is to remember that investing is a long game. It's not about making a quick buck, it's about building wealth over time.
Right. Patience is key.
Exactly. So don't let the short-term ups and downs get to you. Stay focused on your long-term goals.
Great advice. Well, we've given our listener a lot to think about and a lot to watch for. But we'll be back soon with part 3 of our deep dive, where we'll explore some specific strategies for navigating this market.
We'll talk about how to manage risk, how to identify opportunities, and how to stay ahead of the curve.
Sounds good. Okay, welcome back to the final part of our S&P 500 deep dive. We've been through a lot, haven't we? That big drop, those daily forecasts, it's been intense.
Yeah, we've really dug deep into this whole thing, tried to understand what's going on.
But now it's time to figure out, well, what can you actually do with all this information? How can you survive this market with all this uncertainty?
Yeah, that's the big question, right? What do we do now?
Exactly. So give us the goods. What are some actual steps our listener can take?
Okay, so the first thing is you got to know yourself. Like, how much risk can you handle? Can you stomach those big swings in the market, or do they keep you up at night?
Yeah, if you're constantly freaking out, you're not going to make good decisions.
Right, exactly. So if you're someone who wants a smoother ride, you might want to think about putting some of your money into more conservative investments. Like bonds, they tend to be less volatile than stocks.
Okay, that's good for the more cautious folks. But what about those who are a little more adventurous, who see this volatility as an opportunity?
Well, for those folks, this dip could be a good thing. Remember how we talked about the market overreacting sometimes? Well, that can create some real bargains.
You mean those good stocks that suddenly get cheaper?
Exactly. So if you're comfortable with a little more risk, now might be a good time to buy some of those undervalued stocks. But of course, always do your research. Make sure the company is solid.
Don't just buy something because it's on sale.
Right, exactly. Okay, so we've talked about risk tolerance. What else? Well, those corporate earnings projections, they're not just numbers, you know? They can really help you find companies that are built to last.
So look for the companies that are doing well, even in this crazy market.
Exactly. Those are the ones that are going to come out on top in the long run.
So watch those earnings reports closely, see who's actually delivering.
Yeah, exactly. Now, this one might sound a little strange, but don't be afraid to buy when the market's down.
Wait, buy when everyone else is selling. Isn't that the opposite of what we're supposed to do?
I know it sounds counterintuitive, but remember, the market goes up and down. And a lot of times, the best time to buy is when everyone else is panicking.
Buy low, sell high, right?
Exactly. Of course, it's easier said than done. It takes courage to buy when things look scary. But if you believe in the companies you're investing in, a dip can be a great opportunity.
So don't let fear make your decisions for you.
Exactly. Here's another one. Don't try to time the market. Nobody can predict exactly when it's going to go up or down.
So don't try to be a fortune teller.
Right. Just focus on building a good portfolio with solid companies that you believe in.
Slow and steady wins the race. I like that.
Exactly. Investing is a marathon, not a sprint. It's about the long game.
Well, we've given our listener a lot to think about. But in the end, it's important to remember that this is all about people. Real companies, real jobs, real lives.
Yeah, it's not just about numbers on a screen.
So as you navigate this market, stay curious, stay informed, stay engaged.
And don't be afraid to ask for help. There are resources out there, people who can help you make good decisions.
That's right. Knowledge is power. Well, thanks for joining us for this deep dive into the S&P 500. We hope this has given you the tools you need to navigate this crazy market. Happy investing.
Stay informed, stay curious, and good luck out there.
And until next time, happy investing.